All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. A couple things to go out and take a look at this morning. So this video will be a little bit longer than most morning videos will be. But a few things I want to address, and some of them are going to be repeats of what you've heard before. For those that are new with us, they will probably be new, but I'll repeat some of these things as we go forward, just because I know it's an adjustment, a little change in how we used to run the 100K challenge, and I understand some of the questions that kind of come and are derived from that. Hopefully, between all of the videos on here with this with the spreadsheet, and the 4 videos are attached in here that you can go and you can access. Hopefully, with those, most questions are answered, but if there's something that isn't, feel free to shoot it over to support, and they can help you out there. But if we come in and we look at how the challenge functions, how it progresses, and what happens with all the individual trades, things are very very set. Right? It's not like I have to sit there and go, oh, well, here's a new trade on the board. Now what am I going to do? Now what am I going to do? Now what am I going to do? Oh, stock just moved. Now what am I going to do? Oh, it just moved. Now what am I going to do? Right? It takes all that out of it. Really just takes, the majority of that out, gives where things are more probable to happen, and if certain things happen, what the probabilities are, and that's what the algorithm is based on. The entries, the exits, they're all based on pure price action, right? That's it. So here we have Home Depot, right? And we got into Home Depot yesterday. Let's go see where it is right now. The option price is going for what, $5.55, right? So it's going for $5.55. So we're down $120 on the trade here. Since it slid into the close yesterday with the market. But here we are, right? It's a very easy decision, process, to make. What's the stock exit level? 226.84. Okay. Where's the current price of the stock right now? 229.42. Now, this is a 15-minute delay, but, I can go look. We'll use real-time data, but if we come in real time, what's the price of the stock? It's 230.03, right? The market makers probably want to pin it there today, but 230.03. So we're not at the stock exit level, right? We're not at the profit level. Great. So nothing to do there. Auto exit date, October 1st. Well, today's the 27th of September, so nothing to do there. Auto exit date green, October 4th, p.m. So nothing to do there. Right? I'm not looking to buy more. Not looking to sell some. I'm not looking to, rotate the option or any of that. It's just, are these levels hit? Are these dates hit? Those are the dates, levels where I will look and make a change, right? Now, granted, some rarities could happen, but, the normal day-to-day action with the stock, will drive the decision-making process. And so the entries are price action driven. The exits and what to do with the stock are price action driven. It's not about hourly charts. It's not about minute charts, right? I totally, understand the, the desire that many have when they get into a trade. Heck, I do it sometimes, where I get into a trade, and the first thing I do is I use the weekly and the daily charts and fundamentals to make the trade, and then I go pull up the 1-minute chart. And I start staring at the 1-minute chart like it has anything to do with anything, right? But it has nothing to do with it. The algorithm has nothing to do with analysts, TV personalities, what they have to say. Has nothing to do with psychology or, man, this would feel good if this happened, or, if it pulls back a little, that's going to hurt, or if it pops a little, that's going to feel great. Has nothing to do with any of that kind of stuff. Doesn't have anything to do with any recent experiences, right? So, oh man, the last time I traded Home Depot, it did X, Y, and Z. So now this time I'm going to do something different because of that. No, not at all. Not at all. In fact, Microsoft last challenge was the worst stock for the challenge, right? But it is something that I will go out and trade as soon as the signal comes in. I'll go trade it. It doesn't matter, right? None of that matters. It will come down to the price action, and the overall market doesn't matter. Right? The overall market is not, priced into the algorithm. And in fact, we started grabbing call positions last challenge right back here, even as the market was generally bearish, right? And, we got a little heat for buying calls on this move and, but ultimately turned on out and did great. But, it's one of those where it's price action driven. It will continue to be price action driven. And all the other noise, the oscillations, the analysts and the news, that's going to continue, right? It's all going to be there. But it's not going to be encompassed in what the challenge does and what it trades. When we go and we look at a bank of trades, right, it's very easy to look. And let's just go to last challenge. I'll pull up the results of last challenge. It's very easy to look and go, we started with 3,000. We ended over 10,000. Okay, great, right? Was nice, right? 29 trades, 16 winners, 13 losers, right? That this is a hard thing to kind of comprehend, for many traders. How can you make money when you have, pretty much just as many winners as losers, right? But that's what the algorithm's designed to do here. Early on, we got into Procter and Gamble, really didn't do much at all. Ultimately, a little bit of profit, thankfully, that was nice. But then JD, pulled us for a little bit of loss, J&J. But what happens is there's not a single trade on this board that made or broke the challenge, right? It didn't make or break the challenge here, and that's what that's what it's designed to do. And so we go out and we get into Home Depot yesterday, right? And Home Depot, if it goes to 240, it's not going to make the challenge. It's not going to be one of those where, man, we can look back and go, well, thankfully for Home Depot, or else we'd be blah blah blah. If Home Depot stops us out, it's not going to break the challenge either. Yeah, will it benefit it or slightly hurt it? Yeah, absolutely, right? But make or break it, that's not in there with how it is structured. Now, if Home Depot, we wake up tomorrow and Home Depot's at 175, right? The challenge will be down to 1,600. That's just or excuse me, 1,800. That's just the long and short of it. If it jumps up to $400, well, yeah, maybe it makes the challenge, right? But those are very, very much, the rare circumstances, the unusual circumstances, and the circumstances that, okay, when they happen, we adjust here to them. So, I know Home Depot slid into the close yesterday. What does that mean? You're not going to hear me comment on it too much because it doesn't mean a heck of a whole lot. When we put this, the algorithm together, and again, this has been something that's, we've spent a lot of time on. We use this average true range concept to really kind of sort out the noise and to be able to say, look, if we're not moving outside of this average true range, yeah, the option value moves, and we get that, right? Options, they move per tick. We get that. We understand that. But to get a real move in the stock that's going to create real option value, we need it moving more than the average true range. And so a stock like Home Depot with an average true range of 370, if it oscillates within a $2 range, is that significant? Well, typically no, right? Typically no. And, so there's no real action to be taken. And all the action that's going to be taken is, simply on this board. And you're going to hear me repeat this a couple times. I'll repeat it on the gains. I'll repeat it on the losses. Just because it is one of those things that I have found is, seems to be very difficult for, most to grab. I do understand there's an emotional investment in trades. It's, get into something. Okay, gonna go. This trade's got to work. Come on. It'd be so nice if it works, right? I get that. But the challenge is going to be about a bank of trades. It's going to be about, how they perform over time and, how they perform relative to, to the trends that emerge here with those. One last comment. Dollar amounts do not change the action. You'll notice that this is based on a stock exit level, based on the ATR, right? A stock profit level based on the ATR, and auto exit dates. There is zero in here. that says, well, we put $1,200 on this trade, so if it hits dollar level X, Y, or Z, we're going to do A, B, or C. Dollar level does not matter in any of the decision-making process when it comes to these challenge trades. For those that are out there and you're putting more money into the trade, right? Let's say you went out and you bought 10 contracts at Home Depot instead of 2. Just because there's more money in the trade doesn't change how the algorithm is going to deal with it, okay? Now, it's going to make your losses bigger. It's going to make your gains bigger, right? And, if the challenge goes from 3,000 to 0, it's going to hurt a heck of a lot more. If the challenge goes from 3,000 to 100K, it's going to feel a heck of a lot better. And, it's going to, perform a heck of a lot better. But the dollar amount that is in the trade does not determine the action that is taken. Now, if I were to wake up in the morning and Home Depot is trading $100 higher and the option price is, ballooned, yeah, I'm going to step in on that unusual circumstance and make a change based on that huge dollar amount gain. Or let's just say Home Depot goes bankrupt tomorrow. I'm not necessarily going to sell the option, at 0, right? Yeah, it's probably not going to snap back, but there's no reason to sell it at 0, right? So, those are some of the rare cases where something would happen. All right. Okay. So enough about that. Next, entry triggers. No new entry triggers here today. If we come in and we look at the scans here today and what they look like as far as the 3-7 crossover action, here are the bearish crossovers. We have GOLD, Barrick Gold. I'll show you what that looks like. We saw GLD yesterday, or the gold ETF, but here's what Barrick Gold looks like here today. It's not triggering this morning. I thought I had a chance to, but the consolidation risk is just very high here on it. So we'll see how that kind of shapes up here in the afternoon. As most of you know, the consolidation risk component is designed to be a lot higher in the morning. So there's a lot more standard of, you have to have a lot stronger action in the morning to really trigger a signal than in the afternoon. And that will continue here. Now we have 3 upside crossovers: Delta, Honeywell, Las Vegas Sands, and Walgreens. And if we go look at them, here's Delta, right? Nice little 3-7 crossover here on it today. Beautiful setup. In fact, I'd be very surprised if this isn't triggered by the end of the market here today. So we'll kind of see where that is. Las Vegas Sands, this had a huge jump on it here today. Really nice pop. This one has moved, more than 2 average true ranges in the last 24 hours to create the signal, so it doesn't count as a signal there. With that, we talked about that element yesterday, and then we have Honeywell and Walgreens. Now Walgreens here, you can see the nice little 3-7 crossover coming in, but consolidation risk on it's very high right here. We'll see how that looks into the close today, because that could change. And then we have Honeywell, which is one I mentioned yesterday. Could trigger here this morning. It's not triggering this morning, because of the morning, heavier consolidation risk in the morning, but this could easily be triggered by the close of the market here today. So, Delta, Honeywell, 2 more likely, candidates here that are on the watch list. And as the watch list sits, right, we went through a period of time in August and September. Now, where I got on, I went through the watch list with you. Said, look, there's just not a lot of stuff that's very close. On the watch list right now, there's stuff that's just not even close, but there's plenty that's within range of setting a signal at any time. So I did expect some more signals to be generated over the course of the next 4 to 6 weeks, than what we have had over the past 6 to 8 weeks, and that would be kind of keeping in line with seasonality here as well. Okay. All right. So those are the scans. The challenge there, holding on to Home Depot. Now, we saw Micron earnings here last night, and Micron is on the challenge watch list. So I'll jump on talk about it a little bit. This rally in Micron after the last earnings, and we talked about the last earnings, and I made the comment, look, this is a short squeeze deluxe. The earnings, they're not great, but the bears did not get what they wanted, and we saw that short squeeze come in. and we saw it, end. And then we saw this last leg, which I guess I shouldn't be surprised to see, but I was very surprised to see because fundamentally it was not justified at all. And it's Micron. It can make these types of moves, without a problem. The Bulls got a dose of reality here when it came to Micron. And what is that reality? Well, take a look at the earnings per share slide that Micron has been in, right? And, last quarter, the earnings were better than expected, so there was hope maybe the slide wouldn't, continue on as much, right? Okay, fine. Fine. We get that, gets the shorts out. But here's the revenue. The revenue side doing the same thing. And, this earnings report, they beat on revenue, right? They beat on revenue. But the problem with Micron is we get a glimpse into what is expected going forward. And when you look at what's expected going forward, it's expected to start growing again, but nowhere near the type of growth that Micron has had. Right? So the growth that we saw in Micron in 2017 and 2018, we're not going to see the rest of 2019 and into 2020. Well, Micron's a growth stock. Micron's a growth name. Could something come in and change that? Sure, it could. But, this type of massive move that we saw on Micron to bring it up here, and that type of growth, that's not what Micron is signaling right now. In fact, they're signaling quite the opposite. And it could come in better than expected. We could have a trade deal with China. We could have some things change with it. But, when you look at what these earnings are and what the revenues are, and you put this back into some valuations, you can easily make an argument for Micron in the 20s, right? I'm not saying Micron's going to get to the 20s. It doesn't have to. But when you look at just how it is, what those earnings were, what the revenue and earnings contractions are, and most importantly, what the earnings and revenue growth is expected not to be, it's going to take some quarters to really kind of improve the comparables, right? The comparables are disastrous right now, right? And by comparables, what do I mean? I mean the, year over year, right? So the revenue drop was 42% compared to last year at this time. Next quarter is supposed to be minus 41%. Next quarter, minus 19%. Then the third quarter of next year, 2%. Then 9%, right? The comparables aren't getting better right now. They're not turning into the positive. When they start to turn into the positive, that's when we start to see stocks, really take off and really make some strong moves to the upside. And when the comparables are in the negative, we tend to see path of least resistance be lower, for the stock. You compare a Micron, comparables, to something like an Adobe and, its comparables. Maybe it's still bringing up Micron. There we go. Let's see if that'll bring up Adobe. Here we go. Take a look at Adobe comparables. Now, these are the earnings comparables. They're actually increasing. 18, 19, 32, right? So we're going to be seeing a little bit of increase in those. If we look at the revenue comparables, here, it's not so much an increase, but, we're talking about 20% quarter over quarter over quarter of a revenue growth comparables. And so, when you compare Micron earnings to Adobe earnings, and we talked about Adobe on the day they reported earnings, and they deserved a drop, but it was not a drop that is going to see huge follow through to the downside without the market breaking down. And it's a stock that could easily go and hit new highs based on its fundamentals. Micron's not that way. Am I going to put a momentum stock in the garbage and say, well, there's no chance of it hitting a new high? No, I'm not. But when I look at the earnings and I look at what the comparables are to say, hey, you know what, Micron's going back to new highs, that's going to be a tough one here for Micron, and to see it come all the way back into the low 30s, I would not be surprised to see. Now, as far as a challenge signal anytime soon, look, it has a downside 3-7 crossover on it, but it's moved $5 here, more than two average true ranges. It's not going to give us a signal today or anything like that. To get a signal, we're going to need to see some stabilization, some flat. We're going to need maybe see a little bit of rally, and then a new downside 3-7 crossover come in to get some sort of bearish signal. Now, if we get a bullish signal on it, I won't hesitate to trade it. Right? If the algorithm gives us that, I'm going to follow the algorithm. But as I go through, Micron and path of least resistance here, that is not a good report. I also don't think it's all that dramatic for the markets themselves. It's one where I think we're just seeing a normalization here when it comes to Micron, and something where most of the DRAM, flash RAM pricing or flash NAND flash pricing, most of those pricing issues have been deeply discounted. Right, the prices have fallen. They could fall some more, but the big drop in prices has already come, and so we'll probably see a little more stabilization in that, which is much more market pertinent when it comes down to it. Okay, alrighty. Thanks for hopping on. Thanks for being with us here at Trader Minute. As a reminder, if you're new to the algorithm challenge and how that works, come in, check out these videos right here on the spreadsheet. The link to the spreadsheet is in the message feed that is just to the right of this video on your monitor, and it'll have most of the information in there. With how it works. Again, all trades are made at either 10:30 a.m. or 2:30 p.m. Eastern time, and I jump on video at those times. Most days it'll be 5 to 10 minutes. Today, just a little longer, as I wanted to kind of reiterate just a few small things here, as this new challenge gets underway. Again, thanks for being with us, and we'll talk to you this afternoon. Take care.